Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host at Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Nitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Welcome back to the Bitcoin Knowledge Podcast. We have a phenomenal interview today with Nelson Miner. He's the head of OTC trading for the mighty Kraken. Welcome to the podcast, Nelson.
Hi, Trace. How you doing? Been listening to your podcast for many years now. As the guys on the desk just said, you probably ran out of guests to get me on.
No, I didn't run out of guests. You have to dig the bottom of the barrel to find the Kraken down there, right? So I mean, you came on to Kraken about 2 years ago?
Yep, about 2 years ago. Yeah, at the end of 2017, I started the interview process and started talking to everybody on the team, and got to meet Jesse, and he made my dreams come true, as they say, has come to work on Bitcoin.
Nice. You've been enjoying it?
I love it.
It's been fun.
I love it.
Fun working at the mighty Kraken.
Yeah, it's a lot different than Wall Street, but in a lot more fun ways. I mean, the space is so exciting now. So there's a lot of innovation going on, a lot of interesting hurdles that we have to overcome, and it's always something new. Every day it's a new thing.
Yeah, in terms of numbers, like when you came on the desk, number of trades versus like now, how we doing?
Yeah, I mean, recently we had a little bit of a turn down in the amount of numbers that we did on a monthly basis. But from the beginning of 2018, we've more than 20x the number of trades we do on a monthly basis. It's been incredible, the amount of new counterparties that we see on a daily basis. A lot of them are not counterparties that you see every day, but they come in once, twice a month, and they're consistent. They're making trades. They buy it here, sell it there, and trying to take advantage of the volatility that exists.
So are you still the only guy on the team?
No. We've grown quite a bit. Depending on whether you count all the devs or not, I mean, we're between 18 and 20 people globally.
And you head the whole thing?
Yeah. I had sales and trading. We have traders all over the world. We have traders in San Fran, Las Vegas, Tokyo, Singapore, London. We even got a guy, in Colombia. Doing some legwork for us down there, so it's exciting. It's a lot of people, a lot of places.
So the desk ever closed? I mean,
no, we're 24/7.
365.
365. 4th of July, we were sitting there trading. Every day that pops up, we're doing it.
And how's it look? People just like ping you on Skype or like send you a Slack message, or like.
Yeah, there's pretty much four. Usually, it starts off with an email saying, "Listen, I'm interested in OTC desk. I want to accumulate this many coins, or want to move this many coins. So I'm trying to flip out of this and get into that." So we usually starts with an email, and then shortly thereafter, we usually set them up with either Skype, WhatsApp, Signal, Telegram. We prefer WhatsApp and Signal just for security reasons. Our security people are a lot more comfortable with those applications. So we usually scoop people that way. And then we talk to them on a daily basis or whenever they need to on those apps.
Nice. Okay, so running a pretty good sized team, 20 people. What'd you do before that gives you some experience to be able to get this done?
Yeah, I started my career as an engineer, but then I quickly switched over to Wall Street, and I was an emerging market bond trader for 20 years. I started off in the CDS side of the business, but
credit default swaps.
Credit default swaps, which I tell everybody, it feels very much like the space feels today in crypto, where you have this new asset class, and you're starting off, there's nothing that's synchronized. Everything is kind of new, and you're kind of working your way through it. And then the amount of trades keeps building and building and building, and more people are talking about it. And it's becoming, it's starting to kind of spill over into the traditional financial markets. And that's what I'm seeing now. You see what's going on with Bakkt, and you're starting to see the traditional players slowly, very slowly, a lot slower than a lot of us want or felt that would happen. But it's coming. And CDS at that point in the late 90s felt very much like Bitcoin crypto feels today.
Yeah, I mean, I'm kind of a grizzled old veteran in this space. I got some scars here and there. I bet you've got some stories to tell.
Yeah,
I mean, emerging market CDSs during 07, 08, and you're kind of probably peak your career by then.
Yeah, I was actually at the time, I won't mention the firm, but I had the job that I've always wanted, and a lot of us on the sell side wanted, which was to go over to the buy side, but not just any hedge fund job. It was a commercial bank. And in a commercial bank, you pretty much had these prop shops that popped up on all of them and all the commercial banks. And it was like, these guys that sat in this glass fishbowl, and they had all the capital from the firm, access to it, and LIBOR flat funding, which was a real big advantage, right? You'd okay, wait a minute. Let me get this right. You're going to let me borrow your money, use it, put these trades on. And if we make money, we get 20% of that and get to divvy it up amongst the boys. Yes, that's how it worked. And, we did very well. But then the financial crisis came on, and I saw guys lose a lot of money. And particularly like loan books. Because these things, people forget that loans, if you saw a loan trade under 98, it was like, wow, this thing must be ready to collapse. It's traded 2% down. Like, that didn't exist. And then you had loans, these high quality loans trading in the 70s.
70s?
In the 70s.
In what type of time frame?
In a blink. It was like a 3 to 4 month period. You saw loans that historically traded 98 to 101 forever. All of a sudden gapped down to the low 90s, and then boom. Then you had some of these loans that just collapsed. And some of these books had billions of these loans on. And
I mean,
see those guys,
billions or tens of billions or hundreds of billions? I mean, how many billions?
No, I mean, some had hundreds of billions on,
Hundreds of billions of dollars gapping down.
Yeah.
20.
In the whole book, in the whole entire loan books, yeah. Some of these commercial banks had that many. And, you saw these guys that, were veterans of the loan world, didn't believe what was going on. And these guys that were, masters of the universe one day and total schmucks because they're losing billions.
Tens of billions, it sounds like. Yeah.
It was ugly. It was pretty ugly. And then, it's the old saying, you can, the market could stay irrational a lot longer than you could stay liquid. And so they end up selling some, but unfortunately, a lot of help came in, and we ended up keeping a lot of those loans, and they came back, but the damage was already done. It was tough to come back from. But those were days where I saw guys that were in the business even longer than I was, and in very experienced individuals see things that never happened before. And I think it makes me a little bit gun shy now. Like, we put on some positions here and there, and we feel like they're going to converge, but and it seems like no-brainer trades sometimes. But I always tell guys here, especially some of the younger guys, some of the younger traders, like, you can't never, the market could be a lot irrational for a long time, and it could take you to the hospital. So you gotta be careful. You gotta be careful. And and sometimes and you look, because most of the time the market does rationalize itself back. And a guy like me that's being the Debbie Downer on these trades because I'm worried about it. Yeah, but it's that one time that takes you out that matters more than those. Sometimes you're picking up nickels in front of a
steamroller.
100%.
Yeah, just could get brutal.
Yeah, for sure. And it was ugly. I mean, it was. There's a lot of stories back then, but being in that fishbowl and seeing guys, take billions of dollars of losses, that's days I'll never forget.
Wow. You made out like a bandit on some of them, though, right? Like,
yeah, I mean, I had a couple of good years there.
You kind of foresaw some of the potential problems and properly hedged to get some of them.
One of the things I did was some of the things were trading irrationally tight before the crisis, and we were very fortunate, at least in my portfolio. I ran the emerging markets portfolio. We were very fortunate to buy a lot of Mexico protection, which was trading at the time under 150 basis points. And during the midst of the crisis, it shot up to 800 basis
points. Holy cow.
So, we had a lot of it on. And
it's like a 5X, huh?
Yeah. And, that saved us because we had some of the positions were liquid. And, you couldn't find a bid with a flashlight during that period. You call somebody up and say, can you buy this from me? You hear a laugh just like that on the other side. Are you kidding me? How about this other stuff I got on the books? Can you buy any of that? And that's the situation is when you making those calls and you get giggles on the other side because guys are just, they're in over their heads. There's just nowhere to go. And some of these are liquid positions. So having liquid positions, that's why liquidity has, if there's one thing that the financial crisis has changed in people's mentality is how important liquidity is. And I think you see that in the repo markets today and how jittery they are. People value liquidity more than they had in years gone by. I mean, the financial crisis really put a spotlight on that. And I remember those days where, there were names that, were in favor one day because they offered a little bit more yield. And then all of a sudden that little yield became a lot of yield, and then people didn't want them anymore. They wanted nothing to do with them. I think that in itself, this encapsulates what happened in the financial crisis. It was just a search for liquidity and how it all disappeared. I mean, that's what happened with Bear Stearns, right? They just ran out of places where they could borrow. Mm-hmm. And ultimately, that's what happened to Lehman as well. Yeah,
I mean, you look at my book, The Great Credit Contraction, mm-hmm. published, January 2009, same week as Bitcoin got released, and the liquidity pyramid in there where, capital burrows down the liquidity pyramid into safer and more liquid assets. Yeah. And of course I have gold at the tip of the pyramid. It seems that people are still searching for liquidity. Maybe that's why interest rates are doing what they're doing. People are, burrowing into that stuff in order to be safe and liquid. But you know what? We got a problem there because those things aren't limited in amount, right? They're not very hard. It's not very hard. It's easy to make more of them as people use those for and increase the monetary premium that's there. So, where's Bitcoin fitting or going to fit on this liquidity pyramid? In your opinion, where's it going to go?
Well, I think ultimately it'd be up there with gold.
Why is that? I mean, can you get a bid for $20 billion of gold?
Can you give it? I mean, it must trade all the time in markets.
I mean, we have billions of dollars that trade every day,
all the time. And I think that the same thing will happen in Bitcoin. I mean, we just, the thing about Bitcoin that I've come to the conclusion on is that the adoption is going to take a lot longer than we all think. And I think a reason for that, at least with me, is that, when you learn about Bitcoin and you spend the time, a lot of us whiff the first time. We're like, oh, what is this thing? No way,
Magic internet money?
Magic internet. And for me, I even had a smart guy teaching me about it. And at the end of it, I came to a conclusion that governments weren't going to let this exist. I think we're past that now. But I whiffed.
Yet.
yeah, exactly. I whiffed on that first time around. And then the next time around, I did the work on it. And, I spent a lot of time digging into it. And then all of a sudden you get all these things kind of come together and they formulate in your mind. And you're like, oh my God, this is something that's real. It's important. And I think it's going to be around a long time. It's going to help a lot of people. But that process it's a hard process, pun intended. It's a hard process to figure out this hard money. And because you've done the work and you get this epiphany and you say, oh my God, this is the future. You think everybody's going to come in it. So you rush out and you buy as much as possible of it.
Well, you better have some position instead of nothing, right?
Exactly. And you're just looking in the rearview mirror because the crowd's coming. And you keep looking in the rearview mirror and they haven't come yet.
Where they at?
Where they at? So, and I think especially now, and I thought institutions would be in this in a lot bigger way than they are. You know, you hear that some hedge funds, some maverick hedge funds are starting to get involved, and they are, but it's still nowhere near the tsunami money that exists out there to be in this. So just coming around to answer the question is just like, I just think that you get a sense that everybody should be coming into it because you figure this thing out and you say that, wow, this is something that's important and real. And you think that everybody's going to catch on this soon. And adoption is going to take a lot longer than people think, particularly me, that I thought. But when it happens, it's going to be one of those things that none of us saw coming. Even though we've been talking about it forever, we didn't see coming, and it's going to happen in a blink. And it might not happen this happening. Probably happen maybe the next or something like that, somewhere along the line.
Well, stock to flow ratio says $1 million Bitcoin after two happenings.
Yeah, I'm not, you know, although the math is undeniable on stock to flow, you know how I feel about stock to flow a little bit. I just think that people have to have an understanding of it before investing in it to drive the price the way it does. So
I like a term that you coined. You know, we talk about it at dinner, Bitcoin, the great educator.
For sure.
How's it educating people? I mean, you say so many things, but I mean, we're talking multidisciplinary. Like, how's it educating people? Yeah,
I mean, just to take it from my, I mean, I was on Wall Street for 20 years, and I had heard about Austrian economics, but did I understand? And I did bonds. Like, all we did was talk about monetary policy and interest rates, and to have that, you know, those blinders on and not see another way of looking at monetary policy and, you know, how governments manage money. You looking back on it, I feel like, what a dimwit. You know, how did I see this? Like, and, you know, so you start learning about Austrian economics and you realize that there's a whole discipline there and it's deep PhD level stuff. Not, you know, you just scratch the surface and learn about it, kind of learn the general stuff, but there are so many disciplines like that. You know, when learning about Bitcoin, I really want to learn a little bit about it. Encryption, know what SHA-256 was and how it works, right? And why is it that it's so difficult to go backwards on SHA-256? Or, you know, elliptic curves and doing the math and figuring out, okay, you can go this way, but trying to go backwards, there's no real way of doing it. They haven't figured it out yet. So you go through all these things. So there's math, there's encryption, there's, you know, economics, and, you know,
thermodynamics,
all these
computer
things
networking, protocols,
exactly. All these things that, you know, you can learn about and go deep into. You know, I even looked at the code. Not that I could write the code, but I read enough about it. Say, okay, this seems to do this or seems to do that. But, you know, you look at it, say, okay, and then you try to figure out the areas that you are most concerned with. Like, how do we make sure that there's only 21 million? Because that's the most important number in this whole gig. Is 21 million. How do we make sure? And you look at the code and you do this and look at what a node does and you do all those things. But when it's all said and done, if you really want to understand this, and none of us understand it fully, and I'm never going to understand it fully. I'm just don't have the IQ points for it, but I try as hard. And I put my money where my mouth is. But
and the more you learn about Bitcoin, the more you realize you don't understand hardly anything about it either.
Exactly. Just so many facets to it. You know, you hear every day, you listen to another podcast and somebody's got another angle. And you're like, wow, that's pretty bright. But it doesn't make all the other angles that we looked at Bitcoin in the past any less bright.
Right.
It's just how powerful this thing is. So that's why I say it's the great educator, because it forces you, if you really want to understand it, and you really care about it, and you're putting your skin in the game, if you're prudent, you're going to do the work. And that work requires you learning a lot of different disciplines that are interesting and part of it to get your answer on why you're in this thing and why it's important. So that's why I call it the great educator.
So I've coined hodler of last resort.
Yes, you have.
How important is this knowledge and in terms of like providing conviction to become a hodler of last resort? Because I mean, you saw a liquidity crisis.
Yes.
You know, and there's no way, as Mises says, to avoid the final crack up boom. Is fiat currency the bubble? Is Bitcoin the pin? Is that the final crack up boom? How important is a hodler of last resort when we're in an era where money and riches and things like this just become so slippery? Trading at 98, trading in the 70s, just boom. Hadn't seen it your entire life, right?
Yeah, these guys, forgot more about the stuff than I'll ever know. But to me, the way adoption is happening and the way people are learning about it. This is a process. And this idea that all of a sudden, the fiat money is going to be gone and we're going to pop this credit bubble and this is all going in one direction. And I think Bitcoin is going to be the leaders, the Pied Piper for all these institutions, the populace, to understand what's really going on. How many people really understand that when they get that dollar, and maybe in some ways they do, right? Because they probably rush out to go spend it because it's going to be worth less later, like they do in Venezuela, right? But, when you learn about Bitcoin and you really understand that, you realize that your money's getting debased every day, right? So, and it's getting debased at a rate that you're probably not happy with or, understand. And it's getting debased in a method that you have no control over. Okay, so you don't like that war, but it doesn't matter because they're going to print those dollars anyways.
Yeah, the emission schedule is unknown. It's decided behind closed doors.
And it seems to be accelerating.
QE forever, right?
QE forever. And it's not just QE here in the U.S., but it's QE over in Europe, Japan. The money's getting printed all the time. And that money, that dollar in your pocket is worth less. So,
so why hold that?
Well, that's why a lot of us put a lot of our wealth in Bitcoin, right? I mean, it's you end up doing it. Like, for me, I like New York real estate, even though lately it hasn't been a good trade. But I've always thought New York real estate because, I see what's going on. I see in my building, for instance, I realize that there's money from us. There's apartments in my building that no one's in there because people have parked their money in it.
So the real estate's got monetary premium to it?
Yeah, for sure. Especially from those outside of the country. There's at least two apartments in my building that I know of that are Chinese nationals that came in and bought apartments in there. Have I seen them? No, I've never met them. So you see that there's that type of effort to preserve your wealth.
How long can you hold Bitcoin versus holding a piece of real estate? You got carrying costs with the real estate, right?
Oh, for sure. I mean, these people are paying New York taxes, and they're not cheap. New York property taxes in New York City are not cheap.
Property tax, HOA,
for sure.
Insurance,
maintenance on the apartments. You got to have somebody check in on it every so often. You're not living on it. I mean, it adds up. It adds up pretty fast. So yeah, I mean, it's somebody's better be making an income to keep those apartments going. But Bitcoin doesn't need that. So
Bitcoin enables the storage of wealth at a much cheaper cost relative to pretty much every other alternative out there. Art, real estate, land.
Even gold.
And
gold's pretty cheap, right? Because you just got to store it.
Yeah. When we're looking at financialization of Bitcoin, because if Wall Street's going to get involved, we kind of have to financialize it. And that's the sixth network effect, in my thesis. Where do you think we're at in that?
Very early.
How long is it going to take? How do you see that playing out?
That's a great question, Trace. And I think it's, again, that same thesis about it's going to take longer than we think. You look at the repo markets in the U.S. and the collateral and the GC collateral, general collateral, and the infrastructure that's there. That's where you want Bitcoin kind of stepping into. You want it to be general collateral. So if you're a bank, you need an overnight loan, you can put up your Bitcoin and secure that overnight loan. We are probably decades away from that, I think.
Decades?
I do. I think it's going to take a long time because I think there's going to be pushback from it. And, I think that movement's got to start with the people.
Yeah, but you got $1 million Bitcoin price in 2025.
Yeah.
$20 trillion market cap, bigger than the dollar, the Chinese yuan.
Then maybe to expedite that. I mean, that's a pretty aggressive price target. I mean,
yeah, but I mean, we're looking at this is correlated, co-integrated data based on billions of people's individual trading decisions.
Plan B, here it is.
well, Plan B gives out the mathematical model. However, I give out this 7 network effect thesis, and Saifedean brings the the Austrian school thinking to it in a refined way. And one thing that I think we get out of the data is that data is the result of billions of individual decisions being made by people. So, why do we think we might have superior knowledge to the price discovery that's happened with billions of individual trades?
Yeah, I just think that it's going to take I think it's going to take a long time for, that to permeate through a lot of, how many central bankers, are thinking about Bitcoin in these terms?
They're scared of it.
They're scared of it, but they're not embracing it. It's going to take time, and it might take them to die off. You don't see people over 65 investing in Bitcoin. It's the millennials that are taking this and buying it. They understand it. They feel more comfortable with it. They're the ones that were Zuccotti Park during the financial crisis. Mm-hmm. They're the young people that are like, you know what? States, banks, you're not doing us right. So, those are the guys that are embracing Bitcoin, not the Warren Buffetts of the world that are, zillionaires and they're not doing, they're going to have to die off, and that money transfer is going to have to be replaced. And that's going to take time for that to happen. And for people with open minds, people that embrace technology, to get in these positions that you can actually create an infrastructure around that's going to let Bitcoin become part of the establishment. And I just think that's going to take time. And you say $1 million Bitcoin, but $1 million Bitcoin, that's a pretty tough thing. You say 2025, so we're printing out 6.25 Bitcoin every 10 minutes. That's $6.25 million every 10 minutes that you're going to have to create a new demand every 10 minutes to keep that at $1 million price. We're a long way from that, Trace. I understand. The money faucets are on. Everything that you look at, there's a lot of things that we can talk about that's primed for Bitcoin. Like, Bitcoin's ready to go. But to take it to the next level, where all of a sudden that your Bitcoin is, where you have portfolio managers deciding, I'm going to buy Bitcoin instead of this 30-year treasury because this 30-year treasury is yielding negative rates. I just don't, that comparison till we get to that point where we have Bitcoin battling treasuries for a store of value, I think we're a long way away from that.
So even with
excuse me,
even with CME futures and backed physically settled futures and places like LedgerX and custodians that are coming on the scene and banks in Wyoming, the Sharpe ratio on Bitcoin.
It's uncorrelated. It's got fantastic returns. It's scarce. If you do the work, you realize it's scarce. It should be it's the holy grail portfolio management. It should be in everybody's pension fund. But it's not there yet. And we have backed. And backed, how long did we know back was coming?
They made announcements before the announcements.
Exactly. We knew from way back that back was coming. And yet what is it trading like 100 Bitcoin a day? The guy that you just walked by just traded 5 minutes ago, traded 200 lot sided Bitcoin, right? And it's trading 100. I got one guy here trading, a few minutes ago, more than a batch is doing all day. And, and here's New York Stock Exchange. Like, these guys are connected like a freight train, these back guys. They don't have all these institutions coming in just yet. Now, are they going to come in? That rail is there. That line is going to get used. And we're going to see backflows increase slowly but surely. You can mark my words on that. But it's going to take time. And that's, I think it's funny. We kind of created a theme here. But the theme is that adoption is going to take a lot longer than a lot of us believe it's going to, because we feel so strongly about it. We're in it. We believe in it. But those kernels of adoption, it's going to happen one person at a time. And one day there'll be a flick of a switch and we'll all be like, oh my God, look what's going on. And we're all going to be high-fiving. All these things are going to happen. But for it to become part of the financial system here in the U.S., we got some wood to chop.
Is it malpractice for these money managers to not have Bitcoin in their portfolios based on the Sharpe ratios, based on the legal environments, based on the custodian solutions and stuff like that?
if you knew,
why not have some?
If you and I were portfolio managers and know what we know about Bitcoin, it would be malpractice.
Well, I mean, I'm looking at a reasonably prudent money manager, at one of these pension funds or other, where you're supposed to be finding like good, safe investments for these returns. Like just a reasonably prudent money manager. It's been around over 10 years. Why didn't you have any in your portfolio?
Let's talk about one of these money managers, right? So you're a portfolio manager. You probably at least 15 years at your firm, or maybe you got hired as an analyst from another firm, you got poached or whatever, but you're in it a good 15 years. The average portfolio manager has been around for a while, especially at these big, high-powered portfolio managers. You went off, got a great degree from one of these fancy colleges, got an MBA, did your CFA, took the 3 levels of CFA, killed yourself over doing it. You spent working for guys you probably didn't like every day, coming in, doing analyses on all kinds of things, and you paid your dues.
You got your series licenses.
Now you're up in Westchester, you got a nice house, you become portfolio manager, you want to keep what you got, your kids are off to school, you want to do it. They're not going to rock the boat with this fake internet money. They're not going to do it until somebody else does, or somebody else. There's got to be some average. That's why I think Fidelity is one of the most important firms, if not the most important firm that we have in this ecosystem, because you got legit, like top of the heap money manager following this, and they got a lot of smart people working on it. And once they start realizing the returns, and their competition starts to wake up, that's when they'll start laying it. But they're laying the groundwork for that. These other guys, they don't have the chops to get involved in it, right? And don't get it twisted. I mean, she's a big owner of the company.
Mm-hmm.
If she was, she had another boss, she is the boss. She owns the place. She has another boss that she probably wouldn't be doing what she's doing. All due respect.
Isn't that interesting? Isn't that interesting how she's voting with her money?
Yes, she is. She is, and she's putting the firm reputation. That's where it takes gall, because she's got a pretty nice gig on, right? And I'm sure she's not putting a lot. Maybe she's putting a few basis points on people's portfolios of this thing.
Yeah.
So, and not enough where they might notice if it went to zero. But if it goes up, it doesn't take a lot when you got a 20x move to move a portfolio your way. So, and I think that's what she's banking on, and I think she's going to hit a home run. And and I think that's she's leading the way of bringing all these other portfolio managers in that just they're not in a position to do what she's done.
How about, before we wind up, what's it look like at the Kraken OTC desk? We talked a little bit about, communicating via Signal and stuff with customers. What's it look like? How do new customers come? Like, why would they use the OTC desk?
Yeah, sure.
Let's talk the book a little bit.
Yeah, sure. So our primary customers are, family offices, high net worth individuals, OGs come in a lot. Those are pretty much the core. And they come in when they say, hey, listen, I want to buy this house I've been looking at. Can I sell a couple hundred Bitcoin or whatever? And what we'll do is, because we're hooked up on all the exchanges, we see flows both ways every day. We have axe positions where, we're usually running some position one way or the other. So if you come in, we happen to be buying when you're selling, you're going to get a great bid from us. And we're going to get you executed much better than you would if you were on a single exchange. And, you're getting white glove service, and you're going to get your money, and you know that we're wired to you wherever you want it, and in a simple way. And we hold your hand right through the process, and everybody's happy about it. So we focus on those clients that are, trading every once in a while and don't need to have all the infrastructure set up. They trust us. They come to us. We get them a good price. They walk away pretty happy. That's what it pretty much is.
Your desk has been growing. Some of these other OTC desks have been shrinking.
Yeah.
Like, why is that?
Well, I think a big part of it is, frankly, the exchange. I mean, we leverage off the exchange quite a bit. And Kraken's doing a great job of marketing and, securing people's assets. And, customer service has been, doing very, very well. And that's what we pride on ourselves on. I think we spend a lot of time making sure that customers walk away happy. And when customers come to us, they don't leave. We've had very rare occasions where, people say, hey, Kraken OTC is the worst, and then end up going somewhere else. We go the extra mile, and we got a bunch of great guys that are good traders, seasoned guys, that hold people's hands all the way through the process, make sure people leave happy and do the right thing. We're not in it for one trade. We're in it for the next 1,000 trades. We're not trying to make a career off of one trade. So, and I think that philosophy kind of helps. Like and obviously the exchange is a big marketing for us. And I think that's what differentiates us. I think service and the fact that we got the Kraken brand behind us.
And you're trading all the assets that are listed on Kraken? All
the assets that are listed on Kraken. Sometimes we might, 99.5% of our trades are with the stuff that happens. Occasionally we help out. We had a couple clients that were interested in Grin, and Grin's not an easy thing to kind of move around, but we helped them out with it. So
how about other stuff like tethers?
Well, we do some tether. We
do some tether flow.
Yeah, we do some tether flow. People usually using tether to get in and out of positions. But yeah, we do some of that as well.
Nice. Anything else we should mention? Like, I miss anything?
No, I mean, we're trying to expand in areas, in particular in Asia. The exchange itself is doing making pushes to get the right licenses in Asia. I think there's a big opportunity out there for us, and that's where we kind of been focusing on. So it's trying to get more Asian flow. Besides that, it's business as usual. Making sure that clients walk away with a good experience from us, and so they can come back.
A little bit bigger picture. What are you most optimistic about with Bitcoin?
I'm optimistic about so much, and it's not just the price. I think I am from Latin America, and I traded Latin America for most of my career, and you can look at Latin America and its history with governments and all the corruption that's gone on. So when you ask me what with Bitcoin I'm most optimistic about, is I'm most optimistic in giving people back control over their own wealth. And, take Venezuela for an example. Also, I traded a lot of Venezuela bonds in my career. And I spent a lot of time down there. I used to go over once, twice a year. And to see what was once the richest country in Latin America in the last several decades go from the richest to the poorest. It's sad, and it's horrible. And see families destroyed or separated because they've had to migrate to Chile, try to get into the U.S., start working in restaurants in Ecuador, whatever they've had to do to get out of there, to support their families, and to give people back so their money is not the base from when I first started going there was $1 gave you 2 bolivars. Now it gives you over $250,000 a month. It's out of control. And to unbelievable. And to give people back control over their own wealth, their time, I think that's going to be very powerful, and it's going to help a lot of millions and millions of people. And I hate that so many people have their head in the sand over this thing, but it's going to come out, and it's going to start with the people. This is a people's movement, and it's going to start there. And once people start to figure out that they could do that, and once you see a little volatility kind of hurts Bitcoin right now. But once we get to a higher level and we could see that this can actually help people, I think that's what I'm most optimistic about. That I think is gonna curtail a lot of the corruption, a lot of the stealing on the backs of the people.
Yeah, so we're talking property rights.
Yes.
So important for building a civilized society and lifting people out of poverty. And, individuals have to claim their monetary sovereignty.
Yeah.
Right, to get this done. Proof of keys, what do you think of that?
I think it's great. I think once we get financialization of Bitcoin and things like that, this is going to,
be shaking people's cages every year.
Absolutely. Absolutely. I mean, how much rehypothecation is done on all these assets that shouldn't be. Like, you're doing by, and you have fiduciary responsibility. Okay, I own these assets. If I lend them out to someone, they're going to use them to short them probably, but I get some interest back. I'm going to own them anyways. As a money manager, you're fiduciarily responsible to lend it out. The problem is that they keep lending them out, and they lend them out, and they lend them out. and then it gets lost.
No one who knows who owns what.
Yeah, everybody thinks they got some, but everybody thinks that they got it's a slice pizza, but there's 12 slices running around.
Possession's 9/10 of the rule.
Exactly.
when you come from a big family, right?
Exactly.
Exactly. Who's got the food on their plate?
Exactly.
Who's got it in their mouth?
But that'll be shaken. I think Bitcoin will be it'll be one of those assets that's going to revolutionize not just people's personal wealth, but the industries as a whole, financial industry as a whole. And I think proof of keys and making sure that you get physical delivery when you need it is going to change the way people look at assets.
Well, nice. We've had just a great interview with Nelson Miner, head of OTC trading at the mighty Kraken exchange. Thanks so much for being with us.
My pleasure, Trace. Big fan for a long time.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.